Welcome to Trade Live with IT with myself, Ricardo McDonald, and Ronnie of the Eggnog.
Oh yes, thank you very much for keeping the eggnog joke alive as we're coming into July. I'm good, my friend, and how are you?
Yeah, pretty good this morning, actually, full of energy, good sleep,
yeah.
Perfect temperature, 5 days of sunshine coming up in a row.
Nothing to complain, mate, it's like a regular Scottish summer.
And I knew I was coming in here with my Ron dog.
Hey, that was what got me up in the morning.
Did you hit the gym this morning?
No, today was cardio day.
Right. That's an early session, isn't it?
Just hit the run. Just get your shoes on, start running. Pass the cardio. That's my thing.
I had a nice little run last night around Hyde Park, and it paid dividends because I start off in Kensington Palace, round across to the other side, across the actual Hyde Park, and I ran past the big summer, the British summertime thing where they have all the concerts.
Oh right, yeah.
And so normally it's all walled up, and you have to have a ticket to get into the perimeter, but they had the doors open, and it was free entry. So I kind of went in, what's going on? I could hear a load of music. It was getting hyped up, and it was the World Darts Championships.
Oh.
So Luke Littler was there, the world number one. And so that was on, big crowd there. And then also they had Alcatraz and Norris playing on the big screen for Wimbledon. So it was the perfect British night, darts and tennis in the sunshine in Hyde Park.
Hey mate, if you're happy, I'm happy. Whatever floats your boat.
What did you get up to last night then, Rondog?
Oh, that's not to be shared with the. I just had a dinner with my friend.
Friend?
My special friend.
Who is a girl?
Perhaps.
Is it official yet?
Not yet, but we had dinner and then we met.
I feel like we're on Love Island yet. Why have you not put down made it official?
I need to sort my checkings and savings, and it's a bit of details, all of that.
It's time to step up from the demo account. Come on, Ronnie.
Hey,
you're not in demo love world anymore.
We'll get there. But point of the story is we had a lot of good overnight news, Rich, and that's what the people are here for. They're not here to hear about my love life.
Oh, I think they are. Let's have a look what is coming up on today's show then. We've got myself and Ronnie through till 8:30 this morning, but then our new crypto technical analysis part of the show with Axel Rudolph coming up at 8:30 today. He's back. Then Piers is in. It's right, he's decided to come in. He must have saw Intel yesterday. I see Boise already shouting about Intel in the chat there. So Piers' big call from last week up as much. I saw it up 5. Boise, did it finish up 8? No, can't have done. And then 9:35, Angeline's back. She's well. She's risen. Lazarus is in with Lepselter at 9:35.
I think I have to stand corrected on Intel. I mean, obviously it's been roofing in my face, and I've been an Intel hater. Pulled it for a chat.
I mean, it went down first.
It went down first. What was the catalyst?
Well, the problem was that well, do you know what? We might save it for Piers, but basically the chip that Piers was talking about last week, there was then an article came out on Thursday, and they said it might be time to move away from this chip that they've spent a lot of money developing. I think it was the 1.8, and let's focus on the future, which is the 1.4 nanometer.
Yeah.
And so the stock was down 5% last week, but it was up 6.5% yesterday.
Interesting.
So yeah.
You know who's a big fan of Intel?
Go on.
Lefteris on the desk. You guys haven't had the pleasure to meet him, but you should get.
Lefty's scared to come on the show.
You should get him on the show because he's a big.
He refuses.
Intel bull. He's a big
scared.
Intel bull.
He's a wimp.
So I've heard.
Right, let's go. As Ronnie said, there is a lot of overnight action out there, so let's have a look. Well, first of all, let's have a look at the actual moves yesterday, because we've been talking about Nike for a while. We think that it is got some kind of resistance there at $75, $76, and yesterday that came to fruition. So Nike down 3.5%. You had the banks got hit yesterday. Amazon down 1.6, Netflix down 1.5, and even Disney back down towards the 120 level. On the upside, Moderna up 9.7%. Another one of Buckworth's names last week, actually.
I mean, Moderna is. I think a lot of people are still holding Moderna, probably in their ISA after being bullish on it during the COVID era. It's coming back now slightly, but we're nowhere near the levels that we were.
Yeah, I don't think anybody's still holding it from COVID, are they?
Probably.
Right, AMD up 2.6 as well. Salesforce was up there at 1.5, and Nvidia hit that 160 level. It needs to get to, I think it's 161.80 to hit that 4 trillion mark. Tesla up 1.2%, despite Musk telling Dan Ives to shut up. So all the research came out yesterday on Tesla, and Dan Ives said that Musk, the board of Tesla, needs to tell Musk to calm down on the politics. And yeah,
I said that too.
Musk says, remember? Dan Ives, shut up.
One company that I'm actually really excited about is Salesforce. I was looking at an interview with Mark Benioff at Bloomberg.
Right.
They did like a special sort of segment with him, one long episode. And he was talking a lot about the sort of value add of having AI agents, and how we can sort of improve the CRM systems that they have, and their entire, I mean, they own an entire sort of universe of CRM systems. They own Slack as well, and other companies.
I hate Slack.
Yeah.
It is awful.
Well, luckily we use Teams, but
so much better.
So that's a company that I'm really excited about for the long-term futures. They add AI agents without adding additional sort of software engineers. So they're able to upcharge their clients without adding additional cost for it.
Yeah, no, it's a great idea, because currently, if you phone IG for customer service and you've got a query about it, then you get Ronnie or Mini Cooper. So imagine. I just can't imagine a AI computer giving the same possible service at all. Or
the same great banter. And we got my man Andrew McKelvey in the chat. WPP are advertising a deteriorating performance.
Do you want to go on to that straight away?
Yeah.
Right, let's go on to WPP's big profit warning. So they were expecting a fall in revenue of down 2%. To flat, and it's now down 3 to 5%. So yet again, look, the share price has somewhat expected this, right?
Yeah, but it's even worse than anticipated. And
no, it's worse than their guidance. You don't know if it's worse than anticipated, because the share price has been terrible, right? The
share price has been terrible, and let the record show. Producer Phil can sort of rewind back. I've always been a WPP bear. I don't think this is sort of a one-off. I think this is the beginning of the end for not just WPP, but the industry as a whole, with additional investments from Meta into the sort of AI. I mean, they're spending billions in acquiring the best AI researchers. And these guys, these sort of old traditional advertising agencies, they can no longer compete. I mean, if
the stock's down 35%, and you think today is the beginning of the end. It's down 35% year.
I've been banging this drum. I've been banging this drum for ages. I'm just saying we're getting it confirmed now. Whatever I've been saying, it's been confirmed. The markets agree with me, and now the results and the figures are backing me up.
What's the stock called down?
The stock called down?
Yeah. What's the price? What's it going to be today?
I think it's going to open down -5.
Okay. Right, -5 is Ronnie's expectations of where WPP is going to be.
Yours?
Yeah, let's have a poll.
Might even get -7.5.
Ooh.
Producer Phil, get those numbers in.
Right, good stuff. Okay, so, but of course, that is WPP as expected. A terrible performance there. More importantly, call a copper.
Ooh, yes.
What happened? So this was when I was on my run last night. I started getting notifications up of 50% tariff. And of course, the first response was surely not. Surely he hasn't put a 50% tariff on. But oh, yes, he has. Of course he has. There you go, HGA, so high-grade copper. That's the COMEX kind. You need to know there's two different copper markets, right? There's the LME, so the London Metal Exchange price is the one that's usually around 10,000 or trades between 8,000 and 10,000. And high-grade copper is the US version traded on COMEX. That trades around $5 usually. It's now $5.70 this morning. The biggest one-day move in high-grade copper since the 1980s. Ronnie.
Yeah, I mean, we had Graham Dixon on yesterday from the small cap specialist from GeForce, and when we asked him about what sort of industries and what sectors he's looking out for, rare earths and sort of commodities such as copper was one of the things that he mentioned. I mean, he really came in spot on this one. This whole tariff chat, we're getting an extension now, and then we're getting more tariffs, and then the EU is coming on. They're getting a deal. I think it's all turning into a bit of a messy situation. I'm wondering if we can actually retain these levels of copper. Do you think they'll just bounce back, or do you think we'll sort of continue from this level now?
Well, no, this isn't a change in the copper price. It's just a change in the spread.
Absolutely, yeah.
So LME, so we've had a look at copper, and then let's have a look at copper on the LME is down 1.5%. So if you're wondering, how do I equate the two? How do I look at the price of 9,645? Well, you have to change them into metric tons. So 1 metric ton is equal to 2,204 pounds of copper. So the US price is in pound, so it's $5.69 per pound. You have to multiply that by 2,204 and you get that LME price. So just to give you an idea, we've currently got the LME price trading at 9,600. Of course, you're having to put 50% on top of that, right? So if you just were going to put the 50% tariff on, then the COMEX price should trade at, what, 14,600?
Rich, my question to you.
14,400.
My question to you.
Let's just finish this off.
Oh, sorry.
So if you add 50% tariff to the current LME price, then that equates to about a $6.35 high-grade copper price. So it's only really putting in about a 28% premium at these prices because it's at $5.69. So when you see this at 56945, remember it's a decimal place in $5.69. Right, so you're trading high-grade copper at $5.69. That's how you get the difference between the LME plus 50%. It's only trading about 26 to 28%.
Riveting. So my question to you, as a former, you traded all the commodity stocks. Yeah. What will the effect of this be on, say, your Glencores, your Rio Tintos, the big names in the sector?
Well, it's the obvious one who gets the advantage is Freeport-McMoRan.
Do they have the biggest exposure to copper?
No, it's not about it's not your exposure to copper, it's where your mines are.
Okay.
If you have a mine in America, then you pull it out the ground and you can sell it at the price of 569.
There's no need to.
If you have a mine in Peru and you're selling it into America, then you got to pay the tariff. So this is just absurd. It doesn't make sense. What he's trying to do is get copper production back to the US, because America imports 50% of its copper. This is making everything from the AI centers to car production. This is making all that more expensive.
Absolutely.
It's a tax on the US consumer. This is the most absurd tariff so far.
Really?
Yeah, it doesn't make sense.
Big statement, that. Do you think he'll stick to this one?
Well, name one that's more.
No, I'm just...
Name a tariff that's more absurd than this will be a direct tax on the consumer of anything when you're building copper.
Absolutely, Rich. Couldn't put it better myself.
Right. Okay. So let's have a look where the futures are on this. 6,220 we've got on the S&P. NASDAQ 22,670. And yet again, we see a bit of outperformance in the UK. FTSE 100 up 20 basis points. Germany, new highs, 24,200. So is this back to the question around US exceptionalism? Because the decisions coming out there are so absurd that you want to have your cash invested in countries where you can actually rely on government decisions.
I think we're seeing a bit more of a cautionary investor now in terms of capital allocation in the indices until we get an actual firm trade agreement between the EU and the US. So I was listening this morning to Wall Street Journal, small newspaper, you might have heard of them. They were talking about how the fact that it's a lot of, like, the common consensus amongst the European members is that there's a bit of a disappointment that the UK is getting a better deal of a 10% basis line compared to the EU, despite negotiating for much, much longer.
Yeah.
And having a lot, a bigger market to compete with and whatnot. But for me, it seems to be that we're seeing a bit, we're not, these past few days, we haven't seen any crazy movements, any crazy numbers. So I think until we see the final agreement, I think we're going to see a bit more of the same as we see now. But I'm excited to see, one thing that I'll be looking out for is the German autos.
Right.
How we can see if there's going to be any sort of exemption for them, because they're probably going to be the most exposed one, the German economy.
But you talk about as if it's coming in the next 24 hours. When do you think a European deal is going to come?
Well, what did he say?
It's the end of July now, isn't it?
Yeah, didn't he say that we think we're going to send them a letter within 2 days? And by letter, I mean a deal.
No, I don't think so. I think he's going to send his demands. So all the tariffs have been pushed back to the end of July now. Isn't it?
Yeah, 1st of August, that he said?
Well, yeah, end of July, 1st of August.
That's beginning of August,
So, yeah, so I wouldn't expect anything. He is going to lay out his demands but I think we should deal with what's actually happened overnight rather than look to the end of August, shouldn't we? The end of July. So pharmaceutical tariffs.
Really sorry for trying to look ahead, Rich. Won't happen again.
The talk on pharmaceutical tariffs was up to 200%. So he's putting 50% on copper, but he's also talking about up to 200% on pharmas. However, he also hinted that they may get a 1-year delay as obviously companies then move production to the US, which is apparently his aim. So that's the front page there of the Times. Trump unsettles the metals market. There's going to be a lot of movements and very interesting moves this morning, whether Glencore and Rios actually benefited from it, because Rios does have a copper mine in the US there. And yeah, we'll see how that plays out in about 10 minutes' time. Right, what else are you seeing this morning, Ronnie?
What else?
EssilorLuxottica.
EssilorLuxottica, they got a new, I think Meta was already a shareholder with them after their partnership with the Ray-Bans, but now they've increased the stake in EssilorLuxottica.
Did they hold a stake before?
Yeah, I'm not sure if they actually held a stake, but they had a pretty deep partnership between EssilorLuxottica and Meta, which started with the Ray-Ban glasses. Mm-hmm. They've now expanded into their other brands, Oakley, if you've probably seen those. For me, EssilorLuxottica, this is what I like to refer as a high-quality company. Mm-hmm. I was reading a book called Quality Investing. It was written by the managers of AKO Capital, which was founded by Nicolai Tangen, who now runs Norway's sovereign wealth fund. So their trading strategy is to find high-quality companies that are producing, good cash flows, return on capital investment, and EssilorLuxottica is one that is, really proving to be that. Don't mind the chart. You need to look at it. There we go.
There we go.
Look at that. Yeah, beauty. They own the entire supply chain, everything from the production of the lenses and the glasses up to the distribution in, sunglass huts. So they own Ray-Ban, they own Oakley, they have licenses to over 140 brands, and then they also own the companies that sell them. So when they acquire a new product, it's really easy for them to just tuck it in and have it distributed to the entire supply chain. So EssilorLuxottica is a very, very high quality company that's, it's been steady. It's about 23% owned by the family, so it's a long-term view on this one. And yeah, EssilorLuxottica, I wouldn't go crazy with the spread bets on it, but this is something that I would look at in my ISA.
Right, so now that Ronnie's told you everything he knows about sunglasses, the story is Meta has taken a 3% stake in the company and is possibly looking to increase it to 5%. So Meta, of course, because of the VR glasses and the Meta glasses, which Terence owns out in the studio there. We are. What do you see this morning? If you've got one of the world's biggest companies taking a 5% stake, that's a big underlying of your strategy, isn't it?
It's a big vote of confidence, is it not? And it's also a big sort of testament to the new direction that they're going into with these sort of high-tech AI glasses. And also, with the AI hype, it's easy to forget that Meta back in the day was one of the biggest bulls on augmented reality. And that is something that can be implemented with the glasses. You can, shop and whatever and try the outfits on and see the ads from your glasses. I think this is something that, gonna prove to have a lot of synergy effects for the advertising business.
Brilliant. Right, talking about the advertising business, where will WPP open? On the poll, we've got 43% of you are saying more than Ronnie, down 6 to 10%. 1 to 5% lower, down 21%. And yet again, producer Phil's completely ruined the poll by giving an option that makes no sense. Right, let's go to the chart of the day, 754. What country is it from? It is a US stock. Let's see your fastest fingers first. Who is going to guess this one? Yesterday, the correct answer was given by... Who was it? Funky Gibbon. Yeah, Funky Gibbon got it yesterday, beating Hamish. So there's a bit of competitiveness coming in there. While you're in the break, please take the time to subscribe and like the show. Give us a big thumbs up. Right, what is it? Let's see. Did you get that one?
I did not, but man like Funky Gibbon is on fire.
2 in a row.
Coinbase, it was indeed.
I wouldn't have guessed that, actually. I would not have known Coinbase. If you asked me what dollar price is Coinbase, I don't think I would have been within $100.
No, nor would I. But
I know Robinhood for some reason, but not Coinbase.
I do like Coinbase. I think it's a great stock, great company. Very cyclical, unfortunately, but comes with the good and the bad.
Right, talking about crypto and guessing prices. Well, what is Smarter Web going to be this morning? Thank you, Andrew McKelvey, for pointing this out. I had not seen this. He has raised an additional 10.3 million sterling, issuing 3.1 million shares at 325. So we can add that on to the... let me see now. I think I've got, here we go. So treasury analysis, so 3 million shares. So that takes him to 260 million shares, but takes the NAV to 130 sterling. In addition, you can add on the 14 million shares that he is selling through the ATM. So that's another 35 million. That takes him to 135 million sterling. What's that in Bitcoin, Ronnie?
135 million sterling.
Oh no, sorry, 120 plus 35, 155 million sterling.
Good old.
Divided by 78,000 Bitcoin price, 1,987 Bitcoin. He is about to get 2,000 Bitcoin after hitting 1,000 2 days ago. Right, it's 7:59 and 20 seconds, people. We are almost ready for the opening of the London Stock Exchange. Ronnie's searching for his bell.
I know the...
Maybe he's left it at home.
I have the bell, but sorry, just need to get the pen.
Right, we are ready. What is WPP going to be? Is Ronnie right at down 5%? Are you right at home? Down 6 to 10%. It's about a 3% profit warning in the middle. About a 3% profit warning on revenues, sorry, not on profits, on revenues. So let's see, that'll feed through, obviously, to a bigger miss on profits. Keep going. Right, they're open. And they're off. Right, we are seeing then, the house builders to the moon. Persimmon up 2%. Berkeley Group up 2.5%. Vistry up 1.4%. We got a story in the home builders?
We do, that they've come together and invest £100 million into affordable housing, which is long overdue, one would like to say.
7 of the country's largest house builders have agreed to pay a total of $100 million to affordable housing programs. Is that a big positive?
It's not something that I believe would sort of drive the stock forward and sort of use as a catalyst, but maybe the market's just filled with a bunch of socialists who want to see the people get affordable housing.
Like Sweden.
Like Sweden.
Right, let's go back.
How can people expect to have affordable housing?
Right, what's on the downside?
Where's WPP?
Where is WPP? Is it open, producer Phil? Still, it's in auction. It must be down more than 5.
I revise. More than 5.
So just a reminder, if a stock moves in the opening auction by more than 5, up or down, then it goes into an extended 5-minute auction. So, producer Phil's going to keep on watching that. Glencore down 50 basis points. Copper goes up 12 and Glencore goes down 50. That shows you it's not as simple as Glencore just selling at the HGA price, of course. It doesn't really affect these miners too much. Although I imagine for Glencore's trading business, they will have been on the right side of this because they're not often wrong in commodity world.
I mean, it is their expertise. Oh, mate.
There we go. WPP on the extended auction. So let's see, shall we do a quick look over in Europe then? Here we go. Here's your German autos, Ronnie. You want to run us through them?
Bayerach Motorenwerke. And we got SocGen, Deutsche Bank, BNP Paribas. The three big banks there, they're all up, showing positive signs. We saw a bit more consolidation. Was it with Commerce Bank? Was it Banco Santander? Was it Banco? Was it Unibank?
Unicredito.
Unicredit, who increased their stake from 10 to 20%. Total Energy is up. Rheinmetall is up. Sky is blue. What else? Puma, down. The sky is blue again. What are we seeing here? How's Kering doing? 196.
Gucci. 196. What's your next step in Gucci then? You buy or seller 196, 197?
I mean, I've been proven wrong on this one. Well, when we were first discussing it it was down at like 160, and you said it was going to go up to 200, and I called you ridiculous. Look at us now.
Yeah, well,
but
here's the bigger fool, because I never purchased a single share.
Hey, there you go. But I think in the history of Kering, they've had, they sort of like the comebacks are part of their history, with Gucci being revived several times, with the Tom Ford coming in. Was
Tom Ford part of it as well?
Yeah, he was. Tom Ford was. He was brought in as a head designer for Gucci and to revive the brand. But
sorry, their brand, the brand Tom Ford, is that part of?
No. So the designer Tom Ford made his career by taking over the Gucci brand.
Right.
Learned that by watching the film and watch brilliant Italian accents by Americans.
Right, it's almost time for a bit of WPP. What's it going to be? Oh, 30 seconds. So we go live. Let's go live to WPP and see the FTSE 100's first profit warning in a while. It closed at 527 last night. Let's get it onto the 1 second chart. What is going to happen here, Ronnie? What are you expecting?
Oh,
down 10?
Yeah, I mean,
we got about 10 seconds left to go.
Okay, I'd say my prediction is more than 10. I'd say 11%.
Oh, you've changed it now, haven't you?
Yeah.
What's happened in the last 20 minutes that you changed your tune?
Extended auction happened. What's your prediction?
You're changing it from the price. You're changing your view.
What's your view? Give me your take.
I'll go down 15.
13.
Down 13%. WPP. You don't want a profit warning in this market. No. So we're trading 455, but it is liquid. That's good. There's only a 1 penny spread there. 455. That's more than the pull options. You see, and if he hadn't put that silly, as long as only time will tell, and actually put in a proper option of down more than 10%, then people would have been able to.
He's looking at me, but he's talking to producer Phil.
Right, 455. What do you do now then, people? What do you do now? You had the opportunity to be short these all the way down from £9, and now they are down 50% on the year. What do you do next?
I mean, this is not a stock that I would touch. Not even with your money, Rich.
I'd be interested. Yeah, not even on the demo.
Not even on
that was Cam's shout. Great shout, Cam. Yeah, it's tricky, isn't it? When was WPP back here? Did we get down here in COVID? Oh my days.
Blimey. It's almost like you'd figured you know how to work a chart by now.
Oh, look at. No way. So the COVID low was exactly £4.48. We are about to touch that by the looks. We're 2 pennies off the COVID low. That's incredible. The way that it's come all the way back.
But that rally, look at that rally. Up to what? A tenner?
Yeah. What is going on?
while Rich is
Back to the
figuring
old
out how to
weekly.
use a chart. In other words, the two
There we go.
two very much talked about companies, BP and Shell, have they're announcing a partnership in Libya.
Interesting.
Interesting indeed.
It was
Taking note of
my good friend from childhood up in Aberdeen.
Hey, up the Great North.
He was responsible for getting BP out of Libya when the whole Gaddafi situation was going on, and he left the company shortly after because he just said that was too much.
Yeah, I can imagine.
Right, let's see now. If we've got WPP up 15%, what is SWC doing with raising another 10 million sterling? No point in putting them on the weekly chart. They are 360 to 380. That is up 10.6% on the day. Andrew Webley, yet again, proving that he can raise money and continue to raise money for all those that call it a Ponzi scheme. Then the music continues.
Yeah, as long as you get more money in, the good times will continue forever.
We ended up having about a 2-hour debate on this over lunch on Monday between myself and my two new podcast stars. Guys, we have got a very interesting podcast coming. The preview interview with my two colleagues, my gurus in the market, is coming tomorrow. So 9 a.m. tomorrow? Yeah, 10 past 9 tomorrow.
Who are the
We will be announcing.
beloved guests?
You'll have to tune in at 10 past 9 tomorrow and find out.
Ooh, available on Spotify?
But one of them is on the chat. On the YouTube chat.
Ange?
No, it's not Ange. No.
One can only wish, eh?
Thank goodness Ange is back, though. Woof. One day, only Angeline could be sick for one day and then be strong enough to come back in.
Built different.
Exactly.
Different gravy, as one would say.
Right, so we got Smarter Web up 10. We got WPP down 13. What do you do next? What do you do next? Is that the puke? Has the puke happened in WPP? Ugh.
We're bouncing back, Rich?
Well, they think, what are they, how are they changing things?
Well, nothing's changing. I mean, they're now doing advertisement. I see WPP advertisements around London, and now they're doing the advertising about how AI and how they're integrating it into their software and whatnot. But one major key that AI has done is that it's lowered the barriers of entry. You don't need an agency anymore to produce your video. You don't need an agency anymore to understand your target audience. Now you can get all of these with a few subscriptions.
That is a shocker, actually, because look, the key there was performance in June was worse than anticipated, and we expect this pattern of trading in the first half to continue into the second half. So not only was June bad, but
it's getting worse.
They know they're on a trajectory. Our focus remains on ensuring the right balance between investing in the business for the long term and continuing to reduce structural costs while taking appropriate actions to respond to the current trading environment. It's not a current trading environment, it's the future. It is proofing yourself from AI, which is very, very hard to do.
And they're also not giving anything concrete.
Yeah.
I'm not convinced, never was, never will be. I'm short selling this all the way to the grave. Call me Bill Ackman with Herbalife. This is my Herbalife.
Ron Ackman.
This is my Herbalife.
Well, I mean, a small irony in that Herbalife went up 50% in his face.
Yeah, well, that was
Is
because
that
of
what you're
Carl Icahn. That was Carl Icahn.
Okay, I'm your Carl Icahn.
You're my Carl Icahn. You're my... Whatever I do, Rich just wanna dig it in there.
Right, away from the numbers, let's work out the dilute. Actually, I'll tell you what, we'll do that after we take the break. We'll throw up a couple of minute break, and Ronnie and I will get ourselves together for a bit of Fast markets. Oh, there you go. Monkey Man wants a new target price.
For
What's your new target price for
WPP?
0.
Yeah, 0 is my target price. Writing this all the way to administration. I think we're at what, 450 now. I think 300 by the end of the year is not impossible.
Okay.
What about you? What do you?
That's fair.
Wait.
Yeah.
Do we agree, Rich?
I mean, I haven't had a look at it, but if you're going to do that,
that's what I did. Yeah.
Yeah. It will start with a 3. There you go. But having said that, I haven't looked at the valuation. I haven't looked at the EPS. I haven't looked at the. But on that statement alone, that ain't pretty.
No. Yeah. I mean, they literally said this is bad, and it's going to continue to be bad.
Yeah.
I mean, I think they're just trying to set the expectations low. So if they can beat slightly the low expectations, but I don't think they have that sort of setup to get there.
Yeah.
We're not seeing a Starbucks or a Nike here.
Good. Right. 2-minute break. We'll be back.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
All right, welcome to Fast Markets, where we take the pace of the show higher. We wake Ronnie up, we stick a Barocca in him and get him going. What are we gonna? You want to look at copper again, don't you?
I do want to look at copper again because you mentioned a company that you said are well positioned to be the sort of
the beneficiary.
Right,
let's look at that then. High grade copper, there it is, trading at $5.62. So remember, that is $5.62 a pound of copper. Let's go to the mining stocks on my watch list. These are the global miners, okay? So let me just see if I can extend that. There we go. Boom. Right, all the possible miners in the world that you could look for. Starting off, Anglo American has a fantastic copper situation going on. That's why BHP wanted to buy them, right? They didn't want the coal in South Africa. They didn't want the coal in Australia. They didn't want the diamonds like De Beers. They wanted the copper. Anglo's down 1.9 because remember, their copper mines are not in America. Therefore, they do not benefit from that higher high-grade price. Exactly the same with Antofagasta. The LME price is down because people are thinking, right, this is going to hurt demand for copper because what you do is you substitute it. You substitute it with scrap. You're seeing Rio's is down a little bit less because it's mainly iron ore, right? It does have a copper mine in America, so that kind of helps it there as well. But then we look all the way down. We find the ones which do have American exposure. Freeport McMoran, that went up yesterday. That was up around, I think, 2%. Let's have a look on that one as a graph. So on the daily chart, you can see Freeport really strong. It's rallied from April all the way from 30 down to, up to 46, 50% rally. So that's the winner. You can see that it jumped when the news came out. Now, it doesn't have all its copper production in the US, so it's not a straight beneficiary, but that's the one. You can see that that is higher, whereas the others are lower. One of the big questions in this is, will the free trade agreement between Canada, Mexico, and the US stand? So you need to know what companies have copper mines in Mexico and Canada as well. And those are Southern Copper. So that's another US one. Southern Copper. Grupo Mexico. And we have in Canada Teck Resources, one of Canada's largest miners. First Quantum, and then Hudbay after that. So that is your copper world. Who knows what's going to happen next? You've got the questions around substitution. You've got the questions whether people can kind of get round it. And then you've got exemptions. Will the big auto companies be exempt? Will Trump's best friend Elon be exempt? Unlikely. And then, of course, will the companies who are building the infrastructure for AI, will they be exempt? That's the other thing to ask about. Ronnie, you have lost a serious amount of weight this year.
I have indeed.
Are you on one of the pills?
I am not on one of the pills, even though my sister tried to convince me to get on it. But I think the fact...
That's harsh, isn't it?
Yeah, I think the fact that she tried to get me on Vigovi really gave me the motivation I needed to get my act together.
And I've got to say, you have done very well. You've lost 26 kilograms?
Yes, I have actually.
And it shows as well. It really does show. He was a proper porker.
Oi.
Now he is looking fantastic. It's amazing what love does.
It's amazing indeed. But for those of you who don't have a fat-shaming mother and a sister and actually need a little bit of help, we have the big old Novo Nordisk and Eli Lilly. Those are two companies I really looked at, and I really enjoyed seeing the sort of, look at that downfall. That is, I don't think it's justified. As you guys know, I have a bit of a pre-love for Novo Nordisk. Mm-hmm. I think the shooting down of that stock isn't truly justified. One thing that is really interesting to me is because is that Novo Nordisk's biggest challenge hasn't been demand, it's been supply.
Right.
They haven't been able to fulfill the supply, and now they are partnering up with the Italian state. They're getting a 2 billion euro investment to build a plant in southern Rome to increase their capacity and production.
That's a bit strange one, isn't it? Of all the places in the world you build in Rome?
Hey, one in Rome, eh?
Hey, very good.
Where's the... Anyhow, I think one that they're building a new plant in Rome to increase their production in order to meet this demand. Two, they are also now they've applied for approval for a new even higher dose. So they've got up to 15 milligrams, and now they're applying for an even higher dose, which they will be able to charge more for, obviously.
Yeah.
So they'll be able to get increased revenue and in terms of order value from clients, and also number of clients that they can sell to. And my third and final point is that Novo Nordisk, and this goes for Eli Lilly as well, they've had a major uptick in usage in, have a guess, Rich?
Men.
No, geography.
I'll go for...
Think about this. Which you want to really like sell to this country? Booming economy, roaring, massive.
With fatties.
Hey, I don't. Not my.
I was going to say China does not have a load of fat people.
You're close. It's getting warmer.
India.
Get in, lad.
Is there big people in India? Really?
I'm
I wouldn't
sure
have thought
there's.
so. I've never been to India, but my impression was that they're fairly healthy.
Well, there's been a big uptick with over 88,000 units sold in the month of June alone. And that's just like coming in there. Ars Xena, he's got his eyes on the ball.
Oh,
So,
Lady Ars Xena.
oh, sorry.
Her Royal Highness.
My sincerest apologies. I never wish to misgender anyone. So, to summarize my points here,
Yeah.
increased production capacity, increased dosage for higher cost to consumers, and three, big adaptation in India.
I've always thought that Eli Lilly, which we're showing on screen now, is the not sure better, but the stock I'd rather invest in for this. Is that wrong, or is Novo Nordisk now come down to a level where that equates?
I think Novo Nordisk has come to a level where it's now sort of at a reasonable, justified level. I think when we saw that initial up rally when they first came out with it,
Yeah.
I mean, let's not forget, Novo Nordisk stumbled upon this.
Right.
This wasn't their initial business. They just did a diabetes medicine that they realized that people lost weight when they used it. But Eli Lilly has been, they've been investing and researching this for 20 plus years.
Right. Okay.
So I would say that Eli Lilly is the better company to invest in, but I think Novo Nordisk is the more attractive stock to invest in after the beating that they've taken from the top.
Got you. Okay, brilliant. Right, so away from the numbers was asking on Smarter Web. So let's run through this again. If you don't understand the model of these Bitcoin treasury models, it is worth doing the work.
It's a fugazi.
I think it's worth doing the work. As you can see from the share price, it has been worth doing the work. But it's a really tough one to get your head around, right? As I say, I was speaking to two gents that had been in for this market for 40 years, and they do not believe in this at all. They think it's greater fool's theory, that you need people to keep on coming in, as people have been saying about strategy for a long time, right? But if you are sold on the idea, then this is the way to look at it. So the market cap, we know, is 871 million sterling. The share price is £3.40, or was £3.40. It's now slightly higher. Their Bitcoin held is kind of irrelevant, because what you want to look at is Bitcoin held plus cash, right? And that's what has changed, in my opinion, in the last 3 days. Is this cash situation has exploded, because he's taken in 22.9 million from the shares he has already sold, right, in an ATM. So on Monday morning, he's taken in 22.9 million. This morning, he's taken in 10 million, right? So we've added 33 million into his bank account to go and buy Bitcoin with. In addition, he has announced, right, so those shares are all included in this. Sorry, it still has to be updated. So there's 3 million to add to that. That's 260 million shares are now in issue, right? Now, also in that issue number are 14 million shares that are unsold as of yet, but are being sold every day in the market in an ATM. So 14 million shares are sold, 20% of the volume every day, as long as the stock is up from last night's close. That included yesterday, that includes today, and every day going forward that the stock's up. So if you want to put that cash in as well, let's assume that he sells them at £3 a share each. That's 14 million times £3. That's another 42. So the cash situation is the following. 22.9 million announced on Monday. 10 million announced this morning, plus 44 million that will come from the next ATM. That is 54, 77 million addition to the NAV, which includes that. So that is 120 plus the 10 this morning, plus the 44, takes us to 174 NAV. So when you're doing the calculations, you can now do this. You take the share price, which is £3.50. You multiply it by the number of shares in issue, right? So £3.50 multiplied by, we go back up here, as of today, it's 260 million. That gives you a market cap of 910 million. So the new market cap is 910 because we add 3 million shares plus the change in the share price. But then we divide it by 174 million, which is the new NAV. And that gives you a all-inclusive 5.22 multiple. So here and now it's trading on 5.2 times NAV. Now, what you need to do, of course, to then predict a forward movement in this is to then think, right, what if he manages to raise another 50 million, as he has done every few weeks? He's raised 20 and then 31 and then 41. So if you assume that he now raises 40 million, you add that to the NAV, which would then take us to 227. And the number of shares in issue would go up by about 6%. So that would be another 13 million on top of the 260, so it's 273. So then, final calculation is 273 million shares times £3.50. That is 955 million of a market cap. You then divide that by 227 of NAV. So that's 227 million sterling would the new NAV be. The market cap is 955. You divide those by those and it's at 4.2. That's how you see that this thing works, because over time, the multiple of the NAV, that is this one, comes lower and lower and lower. And if we go down to a 4, it hasn't been at a 4 times NAV since the day that it was IPO'd, or right at the start of the IPO. So that's where you have to decide, right, you either believe in it or you don't at a 4 times NAV. Still, you know, it's still an expensive multiple, but that's how it works. There's a, yeah, very good. And that's how you create money.
Very impressive, Rich. That's why they pay you the big bucks.
What is WPP now, my friends?
Ooh,
What is the live price on this
Producer
thing?
Phil.
Above or below £4.60. We're on it. It is now down 14%. So back to the lows. Oh, I know, Angelina, I know what she'd be doing on that. She'd not be happy that it failed that rally and then back down towards the lows. Is it going to see £4.48 that it touched during COVID? That it bottomed at?
Yeah, I think we're going to get lower than that, mate.
Right, it's we've just been speaking about Bitcoin. So now it's time to do charting crypto. We'll see you in 2 minutes with Axel. There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hello and welcome to Charting Crypto. Let's have a look at Bitcoin and US dollars. First of all, because that's the one that most people are looking at, largest market cap and oldest cryptocurrency out there. So what can we see since last week? Well, basically, we're still in this sideways trading range, and I showed you this channel that we had drawn on Bitcoin last week. And basically, at the moment, I think last week what we had, or the week before, it was looking something like this. So just to remind you how to draw a channel, you take the two highs, you have a line here, which is a resistance line, and then you parallel it down to one of these points here, either this one there or the lowest one down here. Now, what has happened since is we've broken out, but then we sort of reintegrated this channel. So it's not really a proper channel break, which is why I want to redraw it like this. And this gives me the current channel that we're in. So what are we actually seeing? Well, basically, we are... let me just redraw the whole thing.
we are basically just sort of trading sideways to down, trying to retest previous resistance. You can see here on the 3rd of July, we retested the high seen on the 9th of June, but since then we've just consolidated. So is that bearish? Is that bullish? Well, technically speaking, what we're still seeing is, if you look at the oscillators, a series of lower highs here. But that's just mirroring what's happening on the chart itself. So you can see a series of lower highs, even though that intraday high here was made, I believe, $110,598, and this was $110,671. So actually that is still lower than that one. So just a series of lower highs, but higher lows. So it's a sort of sideways trend with a slightly bearish bias. But since the 22nd of June low, it's a bullish trend here. So basically what we're just seeing is a trend hitting resistance in a sideways trading range, and we need to now look for a break out of that range. How could that happen? Well, basically, as you can see here, these highs going back to June of this year with the current July high these are the resistance areas we need to take out. So we're talking $110,598 to $110,617 for Bitcoin. Once we break through there, or if we break through there, then we're heading back up towards the all-time high at 111,965. And then I've got some upside targets I mentioned earlier on, which I think I mentioned last week, is the 161.8 Fibonacci extension of a previous move, and that comes in around 121,890 for Bitcoin. So this sort of area around $122,000 is the long-term target from a Fibonacci perspective on the monthly chart. If we manage to break through these current July and June highs, which would likely take us very rapidly to the all-time high made in May and then higher. So that's the bullish scenario. But what if we're not right? And after all these Fibonacci extensions, they are there, but it doesn't mean they're going to get hit. And even if they do get hit, we don't know when they'll get hit. So right now, short term, Bitcoin is trading sideways, as we can see here, above this support we made on Friday of last week, the 4th of July low. Not much going on because of the US holiday, obviously, Independence Day, but basically at $107,000, 335, that was the support. That has been retested Monday and on Tuesday, so yesterday, and we're holding above there. So as long as we hold above there, we still have a bullish bias in the short term. If we don't hold there, you've got this orange line here, which is my 55-day simple moving average. As you know, I prefer to use the 55-day instead of the 50-day. Why? Because it's a Fibonacci number. And then you've got this potential support line. But, this is just two lines. It doesn't really mean much. So let's just not put it on there, actually. So if we were to fall through these lows and the 55-day simple moving average, where's the last important reaction low? Well, it is simply the July low, the early July low. Why? Because we went into it with two candles negative and then out of it with one big candle positive, the green one here. That is an important minor low. As long as we stay above there, the trend is deemed to be up in the short term. When I say short term, from the 22nd of June low. So basically, where's this low? It's at $105,159 for Bitcoin. As long as we stay above there, the odds, in my opinion, still favor the upside. Now, I'm saying in my opinion, I'm not giving any advice here, and we are not trading basically Bitcoin. We're just looking at levels where we may want to invest in the cryptocurrency. But we know, of course, that it is unregulated, as are all cryptocurrencies, and therefore you can lose all the money that you invest in these. So just always be mindful of that. Now, if you're short Bitcoin, basically where's your stop loss? As I said, for me, a break above these current July and early June highs, that would probably indicate that we're going to go higher. So I would probably have a stop loss above these highs here, above the June high. If you can afford to, you can have one slightly higher up above the May high in case you're short. But how far could we fall if the market were to come off, if Bitcoin were to come off? Well, if we were to fall through the 2nd of July low, we may go back down again towards the 5th of June and the 22nd of June low. So these were made around the 104 $430,000 to, I believe, $98,330. So that's the support area. But yeah, not much going on. I've got a question about Ethereum. Let's look at Ether. Basically, what we can see here, and we analyzed that last week as well, we had this resistance area here. And I've got a question from Hamish saying, looks like a golden cross between the 50 period moving average and the 200 moving average. So let's just put these up here. So we've got here my 200-day simple moving average, and I've got the 55, but even if it's the 50, it's the same thing. Now, the question is it a golden cross? Well, technically speaking, it depends what your reference book is. There is the book by John Murphy, the sort of reference book for technical analysis going back to the 1980s, and he used a 50 and a 200-day simple moving average. A lot of societies, such as the Society of Technical Analysts in the UK, look at a golden cross and say it doesn't matter what the moving average actually is, but both moving averages need to be pointing up for it to be a golden cross, or both need to be pointing down for it to be a dead cross. Now, let's look at the 200-day simply moving average on Ethereum. Is that pointing up? No, that's actually pointing down. And is the 55 pointing up? Yes, that is still pointing up at the crossover point. So we've got the 55 pointing up and the 200 pointing down. So no, this is not a golden cross. Had the 200 pointed up and the 55 pointed up, or in your case, the 50-day moving average pointed up, then it would have been a golden cross, but that is not the case. Did we see one earlier? Going back in time. Here, this one was a golden cross. That one here. Why? Because you can see here the 200-day simply moving average was pointing up, and then you had the faster 55-day simply moving average crossing to the upside. So both of them pointing up. But can you see where the golden cross buy signal was given, technically speaking, right towards the top of December 2024? So always be aware that moving average, especially these long ones which cross over the 200-day simple moving average, can be lagging and can get you into the end of a trade or a trend in this case. So just be very aware of that. And then you can see here we had a dead cross. Why? Because the 200-day simple moving average was pointing down and the 55-day simple moving average was pointing down. So where did we get this sell signal, this technical one? Only down here. So towards the end of that down move. Anyway, going back to Ethereum, what can we see on this chart? What has changed since last week? Well, last week we were sideways trading, and look, what we did, and that's kind of interesting really, is that on the 2nd of July, we retested the previous lows. Can you see all of these lows? And you know that I love clusters, and this low here going back to the 6th of June, which was made at $2,387 on Ethereum, on Ether, I should say, the cryptocurrency. And we basically retested that low, which coincides with all these daily lows, more or less, on the 2nd of July, and then formed this bullish candle. And this bullish candle, what did it do? Understand the price action. Well, basically what it did, it more or less engulfed with its body, so the difference between the open and the close, 1, 2 negative days, and then 3, 4, 5 positive days, and 2 more negative days. So basically, within a day, we engulf practically, if you look at just the bodies, the difference between the open and closing prices, about 6 or 7 trading days. And that is bullish because we closed higher, as you can see here. Since then, we've been trading sideways, but right now, we're testing the previous high again from the 3rd of July. And that high was made at $2,635.78 according to TradingView here, my charting software. And if we were to break above there today or during the week, the next upside target would be this high here, the 16th of June high at $2,680. And then our resistance area, this one here, which we drew in between the 13th of May high and the high seen at the end of May. So that is a possible resistance area here between, let's say, $2,502 and $2,737. And this may be back inside if we were to rise above the 3rd of July high and close above it. So that's the bullish scenario. What about the bearish scenario? Well, basically, yes, we have a series of higher highs and higher lows. So short term, since the 22nd of June, just like on the Bitcoin chart, we are in an uptrend. But medium term, as you can see here, since the high made in mid-May, we've been in a sideways trading range with a false breakout to the upside and then a corrective move down. So right now, we're just sort of sideways trading with a bullish bias. But as long as this high today here holds and we don't go and break and close above the 3rd of July high, we may just be trading sideways again and may actually retest the short-term uptrend line here going back to the 22nd of June. If we were to fall through there, we may retest the 200-day simply moving average, this darker red line here, $2,484.72. And then below that, we've got this really good support area here going back down again towards the 2nd of July low at 2,376.51. So basically, the bearish scenario would need us to actually see a fall through the 200-day moving average and the low here on the 4th of July. Only then would that be a minor double top. Unless that happens, the odds currently from a technical perspective are stacked towards a retest of that previous high on the 3rd of July and then it probably breaking through there based on the charts. Again, I'm not giving any advice here at all. Let's look at Solana because we've got a question to do with Solana. What does that look like? And it's a really good question because here you can see the cryptocurrencies are trading differently, aren't they? Bitcoin just now, Ether, and now Solana. So let's look at Sol, and what we can see here is basically us breaking out of this downward trending channel. And last week, I think we discussed very briefly towards the end of the show that we were retesting that upper downtrend line, which then, because of inverse polarity, acted as a support line. So quite often, when if you miss the break or you don't want to buy it on the break higher here, quite often you get an opportunity to actually go back and retest that previous resistance line, which now, because of inverse polarity, acts as a support line. So this is exactly what happened here on the 1st of July, 2nd of July, and again, can you see on the 4th of July? And then we held here above this support area, and right now we're just trading sideways. Right, what can we see? Let's forget our channel, because after all, the channel may, I mean, we may not know, but maybe it's just a channel which has been redrawn here, and maybe it's now a wider channel, and what we saw previously was just a narrow channel breakout, and it's not coming to anything. Who knows? But what can we see on our charts? Let's just make it really simple. Where's our high? It's here. Where's the next higher high? That one, then this one, then this one. So we have a series of lower highs and a series of lower lows. That's the definition of a downtrend, which is why I've drawn down this downtrend channel here. What have we seen since the 22nd of June low? A series of higher highs and higher lows. So we've got a short-term uptrend in a medium-term downtrend. The question is, can we break out of that downtrend? So what I would like to see here on the daily chart is basically a rise above the last reaction high. Where's the last reaction high? It's this one here. That one is higher than the one to its left and to its right. If we close above that 3rd of July high, which was made $156.36, then it's pretty likely, because we're also breaking out of that downtrend channel, or in the previous case, if you want to leave your downtrend channel to where it was before, and you expect that to have been a breakout of that downtrend channel with a retest of that channel as support, well, if we break above here, then it's pretty likely we're going to try and retest the 30th of June high, which was made $159.88, and a break above that one, because that one's more important. Can you see here? We went all the way into it and back down again. That's more important than a small one like this. Well, if we break above here, basically above $160, then it's pretty likely we're going to go higher again and retest the 200-day simply moving average here at $164.68, and probably also the 11th of June high at $168.34. So that is this scenario if we manage to break higher. We'll have to see whether we can do that or not. Now, if you're short, if you're selling Solana, and you believe the price might go down, where's your stop loss? I would also say, from a technical perspective purely, again, I'm not giving any trading advice, and cryptocurrencies are unregulated. Basically, as long as we stay below, from a technical perspective, the late June high here at $159.88, then we technically remain in a medium-term downtrend. If we were to then fall how can we confirm that we are still in downtrend, that we could go further down in this scenario? Well, basically, we would have to fall through the support area. And where can you support see? It's the 4th of July low, and then that's marginally above this low here on the 1st of July. That was made $144.95. So once, or if we were to fall through here, then we could basically fall back towards these lows here, these previous lows, going back to 5th of June and 30th of June. And they were made around $141.50, $141 or so. So that is another possibility if this is still a downtrend from a medium-term perspective. So basically, we'll have to see what they will do in the next few days, these cryptocurrencies. We could look at another one now, for example, Cardano, which we haven't covered yet, and just start a new analysis on it very briefly here. And what can we see here? Again, a totally different chart to the previous ones. So what is Cardano doing? Well, if we don't know, what we do is we basically go to the longest chart possible. That is the monthly chart here. And we can see we had these huge advances like we saw in Bitcoin and other cryptocurrencies. Then the declines, but since then we've seen advances, but nothing like the previous ones. But what is interesting, can you see here, the failure in December of last year was basically more or less where the January 2018 high was made. And since then we've come off on the monthly chart. So on the monthly chart, we are actually seeing lower highs and lower lows. So this is still a bear market monthly. On the weekly chart, you can see though that we are now holding above this support area going back to February 2025. So let's just look on the daily chart, and we can see here that Cardano is basically holding at this support area here. Can you see here that the low made on the 22nd of June was exactly where the 7th of April low was made, and that was very close to the low here made on the 4th of February. So we've got a really good support area down here, and that's around 51 cents or so. And then the question is, what have we seen since? Well, we can clearly see here we are also again in a downward trending channel. So how do we draw that channel? We can do it from there to there, but that would be a pretty flat one. So that's not of much use to us. So what we do instead is this one here, where we have these points. So this high and that high, and then we move that parallel down to, you can use it the extreme if you want, or if you want to just put it there, so it's really up to you. But anyway, that's the downtrend. So again, we're seeing the similar pattern to the other two cryptocurrencies, other three, I should say. And you can see here that we're sort of trying to break out to the upside, and that we are basically above the short-term support line here. So if today we close here, that would mean we're breaking out of the downtrend channel. What I would need to see though personally is a rise in daily chart close above the 3rd of July high, which was made at 61 cents. And if we manage to do that, then perhaps we could see further upside take us towards the 55-day simply moving average. This low here, going back to the 6th of May, around 64 cents or so, and also this high here, around 65 cents, 75 at the mid-June high. So that's resistance basically in case of a bullish scenario. In case of a bearish scenario, well, your stop loss has to be, in my opinion, just above this last reaction high here on the 3rd of July. That's at 61 or just slightly above there. And in that case, if that's still bearish, then we need to see a fall through the 4th of July low, just like on the other cryptocurrencies. That was made at 56.33. If we fall through here, we are very likely going to retest this sort of 54 area and lower. So these are the two different scenarios. And I hope I've shown you how to analyze charts in a quick and dirty way. And I hope that you find this sort of analysis useful. See you again next week for Charting Crypto.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the All Sessions opening, which is going to be in about 10 seconds. We've got Piers Buckworth on the show.
Hey, man.
Good morning to you, Piersy. How are you doing?
I'm good, mate. How are you?
Yeah, pretty good. You're going to ring the bell for us here to open the New York Stock Exchange.
We have to do it with this thing. It's a pretty uninspiring sound, but there we go.
Brilliant. Right, so we've had a big couple of days. Intel, huge day yesterday. Is it going to crack on?
Yeah, I mean, I don't think it's going to be a straight line. First of all, it's stuck in a range, which is a very definitive, pretty strong range at the moment. But as I hope that I've made clear with regard to my views on Intel, this is not a trade. I mean, it is turning out to be quite a nice little trade in the short term if you entered it last week. But this is not a. We need some news here. It's surviving at the moment on the fact that the market is quite powerfully rotating into a lot of these unloved, heavily shorted, and negative parts of the market. There's plenty of examples, and Intel obviously is quite.
So let's have a quick look at just what's happening as we speak this morning, and then we'll dive into things. So Netflix
sessions, there we go.
Small, yeah. There's nothing much on the downside. The future's relatively flat.
Go back up. What's Moderna doing pre-market?
Right.
Just one page up.
Let me go on to this side, and you should.
We need to talk about that again, sir.
Right. There's some of the lively ones.
It's all very muted so far by the looks of it. Not even one. There's only one stock that I can see that's greater than one. There we go. Alibaba. I mean, all that stuff's coming back. Yeah, there's nothing that really stands out in the all sessions, to be honest with you, mate. I mean, I think yesterday was a pretty big day. There's a lot going on in the market under the hood. It was Monday. We saw Palantir up 3.5% and Rocket Labs up 9%. Two big retail favorites for no reason whatsoever. I mean, the Rocket Labs was due to Trump, whilst all the other stuff sold off.
Because SpaceX.
Yeah, no, it's literally. Yeah. I mean, that is what's going. That is what is this market is right at the moment, right? I mean, apart from the fact that the real stuff The retail stuff is just living in an extraordinary land. I mean, Tesla's down 7.5 purely because Musk said he wants to start a political party. Rocket Labs is already up about 50. It's went up another 8 on volume, broke out purely because Trump said that he wants to, Musk said that he wants to start. So it's all very, very, very pathetic and silly, but it is what it is.
Right, so there's not too much this morning, is there? Let's just see if anything has moved more. No, that's, there you go, Moderna, 32. Yeah,
so there we go. I mean, I think Moderna needs to be talked about. I mean, this is a really interesting situation, and we spoke about it. I spoke about it with Angie the other day on the show. You know, I have it in my book as a, for multiple reasons. It's basically, it's like a free option as far as I'm concerned on potential viruses, and also if they get their HIV or their oncology pipeline going, but that's not what's going on here. What's going on here is it's one of the top, it's a heavily shorted name, 21% short interest, so it's right in that basket. They had some good news with regard to the big beautiful bill, which has filtered through to a lot of different companies, including Plug, which we can talk about in a bit. But what happened here in the biotech space in particular is Trump said that they can essentially expense their research costs, which means that for guys like this,
tax write-off.
Correct. So it's essentially giving them a bit of a tax break essentially for their research. So, and guys like this who are bleeding cash and desperately need that reacted in an oversized way, on top of the fact that it was already breaking out, on top of the fact that it's one of the stocks that was being rotated into, and the general biotech strength, because there's a lot of biotech stocks are exploding all over the shop due to the M&A stuff going on. So there's a lot going on with Moderna. Is it going to continue? My price target in the short term for this was 28, right? And I was buying it when it was down at 22. Mm-hmm. So it's a technical and it's a positioning game right now. It's not. It's got nothing to do with what the company's doing whatsoever.
Well, let's just dip into that a little bit more then. What do you mean by it's a technical situation and positioning? Because this counts for the whole market, right?
Exactly right. I mean, quite frankly, the positioning, if you ask me, is you know, if you want to talk about what moves markets and stocks, you've got to talk about earnings, you've got to talk about macro, you've got to talk about company news, of course, but then you also need to talk about positioning. It's very, very important, and right now it's paramount. I mean, literally, it is a game of positioning, whether it be into the semis, into the unloved areas of the market, out of the banks that are overbought, etc. It's just it's a constant machine, and so when I say positioning and technicals, this is now broken out, technically broken out. If you bring a chart of Moderna up.
Yeah, let's get that one up for you. So Moderna, on the chart, how far back do you want to go there?
Oh, I don't know. So we got one with the 200-day.
Whoosh.
I mean, if you go a long, long, long way back, it hasn't really broken out, I suppose. but the point being is it's broken out of the small range that it's been in for a while, okay? And I'm talking about on a short-term basis. There's no major breakout for Moderna.
But this is because the rest of the market is so high.
The market is trying to find areas to continue to buy. The market just wants to go higher. Things get exhausted and they come back, and now the market is rotating into small caps, which is being facilitated by the macro, which is incredible.
Because the large ones cannot go any higher. Because they are fully priced.
Exactly.
They have to find the greed moves to somewhere that they still think it can go up.
Yes.
It doesn't mean that it's a good stock or its earnings potential is any better. It means that the other ones are too high.
The risky junk parts of the market are the ones that are getting bid up right now, which is often a sign that we're getting close to a top in the market. It doesn't necessarily mean that. That's old school rules. But nonetheless, the market's desperate to buy some stuff, and it's going for all the stuff that's beaten up.
The dash for trash.
Correct. I mean, it's literally a junk heaven right now. I mean, I'm trading biotech stocks that have got zero anything. You know, and you can just trade them intraday. There's a lot to choose from. But that's the market we're in.
So in terms of you know, putting it into an analogy, this is like you back in your school days, and it's 2:45 a.m. in a nightclub, and you're just looking for any stock that you still have the chance to.
Yeah, exactly. That's exactly right. You're just looking for the dregs at that point.
But this is the problem, right? That when you're at 62.80 on the S&P, the valuation is 23 times.
Yeah.
So where do we go?
Yeah,
from
well, I mean, I know you and I have been having this debate for a long time. First of all, I think the goalposts for where the S&P should be in terms of fair value have moved significantly due to the constituents of the index, and also the dawn of quantitative easing, which I think changed all multiples back in 2009.
Yeah.
However, I think that once we get, and it's just such a nuanced and subjective game talking about valuations, in my view. 23 times is traditionally very expensive, or right at the top range, at least, top end.
Especially at peak margins.
I mean, look at it. I think you just need to look at the best companies in the world and where they're trading. Let's do it with Microsoft. Microsoft is trading at, I think, 34 or 35 times earnings.
Yeah.
Which is very expensive on a traditional metric, but is it on a price earnings growth ratio? Not so expensive. But it's still, their growth, luckily they ticked up the other last quarter to 38% or whatever it is, which is a decent, if they were growing at 15%, 34 times earnings is way too expensive.
Yeah.
So they've got to keep the growth going. And that's why these things trade at a premium. Plus, we're in a market now where we're beginning of a new decade-long, and we're in year one, I think, of a decade-long bull market in AI potentially, right? And that gets people very excited.
Sure we're in year one then.
Well, I feel it
started October 22.
Yeah, yes, I agree. But that was the large language models. I'm talking about the sort of the next generation of that. I think the large language models, to a degree, are kind of, in a weird way, maturing, and there's other parts of the AI story that are evolving.
Yeah.
It's anyone's guess how long it lasts for, but my point is that we've been given this new micro theme, which incites the animal spirits on top of what they already have anyway.
Yeah.
And the macro's now in a really good spot for the time being. So it's kind of game on, but it's also very, very, very overbought in many areas of the market. But no one's long. When I say no one's long, the professionals have all sat this out.
And that takes us perfectly on to this question of retail. So let's go into Tech Focus. Right, so who is driving this market? We know that it's been fumbled by the professionals because they all had 5,600, 5,700 targets.
Or 4,200, yeah.
Or 4,200. And now they have taken this up. Oh, I hear the door opening behind me. What is about to happen here? It is Luke Moore, ladies and gentlemen. Come on in, Luke.
Sorry.
He's got the coffees.
Come with the coffees.
We like that a lot.
Piers, I'm sorry.
Which one's mine?
Mate, I'm all good, man. I've had 2 this morning already.
Oh. Ones are the oat flat.
Hey, you don't get better than that, do you? Luke, Piers, Luke.
Hello, mate. How you doing, buddy?
Right, have a good show.
Brilliant, thank you for that. Desperately need a coffee to get me through a Piers interview. So, right, so we've walk us back to April the 2nd.
Yeah.
Institutions sell, right? And they are max long equities, because we know they are, because it was at all-time highs.
Well,
so,
yeah, but
they see the risks in the macro,
yeah.
and they tend to reduce exposure to equities. Retail doesn't do that. Retail sees any sell-off as the opportunity for them to come in and make money. And boy, oh boy, have they made money.
Yeah, I mean, the whole paradigm has shifted, okay? And this is, there are obviously there are nuances to how the construct of the retail market, but that you can't underestimate if you put together how many, let's just take Robinhood platform, right?
Yeah.
How many people are on their way to work in the morning or on their way home or sitting at their desk and doing something completely unmarket related?
In America.
In America, I'm talking about, and this is actually starting to grow a bit in Europe as well, but mainly this I'm talking about America.
Yeah.
They go onto the Robinhood platform. They see.
Let's get Robinhood up there.
They see Robinhood. Let's use Robinhood as our best example. This is their flagship stock.
Yeah.
Right? The professionals aren't buying this stock. Every single person I speak to is desperate to short this stock, but they just keep getting hosed or not doing it.
Yeah.
They open up their thing. If it has a down day, and they're like, well, just buy more. They don't care about the valuation.
Of course, the real smart ones open up their IG platform.
Yeah, well, exactly right. You open up your IG platform and away you go. But the point being is that these people are not looking at what Jay Powell's saying. Most of them probably don't even know who he is.
No.
They're not looking at the
they
value.
think he's an idiot because Trump's told them.
Exactly. And they all listen to Trump, which is fair enough. And Trump told us to buy the market 25% lower for the easiest thing in the world. Point is the market's not that difficult. It hasn't been for many, many years. It really isn't. The more you know, and I feel quite strongly about this, the more pain you have. Professionals are struggling to keep up with the ETFs, to keep up with the retail punters, and to keep up in general, because you can't overthink it, right? I'm overthinking. I try not to do it. I've been going on about Palantir because that's, in my view, an unusual situation.
Sometimes you see excess.
Sometimes it's enough, too much. It's too much, right?
And this is where I was going. So we see at some point we have to come back to reality in valuation terms, because you are buying something for the right to their future earnings, right?
Yeah.
Now, sometimes, because it's retail's favorite stock, retail does not give two hoots about valuation, so it buys it. And when the market goes higher, the market takes the stock higher. Retail buy it. They buy their favorite names, and they continue to buy their favorite names. But that comes to a point, as Piers says, whether it's the dash for trash or whether it's looking elsewhere for opportunities of stocks that have been left behind, some people still continue to buy their favorite stocks no matter what the price is. And that's what we think might have happened in Palantir.
Well, yeah, I mean, that is what's happened in Palantir. But also, if you speak to people about Palantir who don't work in the market, but there's a whole cohort of retail investors who consider themselves professionals.
Oh yeah, sorry, I don't demean.
No, and I'm not being demeaning at all in any of this. I'm just speaking the truth, right? In order to be a professional, you need to work in markets for 20 years and see cycles and understand macroeconomics, speak to hedge funds, and understand exactly how things work from the bottom to the top. Most of these people do not.
And you started at the bottom, didn't you?
I started at the bottom, and I'm still there. But the point being is that you have to take all of this into consideration. If you're trading Glencore, this is not relevant.
Nope.
Okay. If you're trading in the American market, in tech in particular, and in particular the stocks that are popular in the retail space, this is a seriously important part of the equation, and one that you've got to factor in. And it's one that's rife at the moment, because these people, they can see blood, right? They can see it, and they know that the pain trade is higher, and they've got control over it, and they continue to push it. And we'll see how it plays out, but it's getting a bit grabby right now, right?
What's your a bit grabby?
You in a nightclub at 2 a.m. Yeah.
2:45. So what is your view here at $140 in Palantir? Talk to us. What does Palantir have to do to warrant?
Well, I just think we need to. I mean, I don't even know how many people are listening to this show. I just wish this was. I could say this in a global forum and have someone come back to me. I'm open to all responses to this, because I've never seen it before, right? And I'm talking about retail stocks and meme stocks. I'm talking this.
Chart off, guys.
In order for they're trading on 107 times sales. Okay, but that's okay. But that's okay. But it's not okay if you've got 30% revenue growth. SoundHound, I'll use as an example. Pure AI, been around for donkey's years. Bit of a retail stock. It comes and goes. They have 130% revenue growth.
But what does a multiple of sales mean? Explain that.
Okay. Well, a multiple of sales is as a ratio is of course your price per share divided by your revenue per share.
Yeah.
They're floatable in the floatable shares.
So if Palantir's revenues never grown in the future, and obviously we're not suggesting they would, if they didn't, the company would have to pay you out every single dollar of their revenues for 107 years for you to get your capital back.
Yep.
From investing in that stock. So it's all dependent on how quickly they can grow the revenues, because obviously you don't want to wait 107 years. And then, of course, you got to take taxes into consideration and costs and everything. You get down to the earnings line. So 107 times earnings is a lot.
But no, they're on 600 times earnings. Okay, this is crazy. Let's use Nvidia as an example, right? Okay, it's a great example. Rewind the clock before ChatGPT and before the GPUs exploded into the market, and when Nvidia was an expensive, speculative growth stock. Okay, and admittedly, this was prior to the real power of retail coming in, but it was right on the cusp of it. The most expensive that NVIDIA has ever been in its lifetime is 30 times sales. Right, 30 times sales is really, really expensive.
Yeah, and that was...
But the goalposts have moved.
Probably around here,
Yeah.
as it started to rally 12 months ago, and it got to that crazy $1,000 level.
Yeah, it got very crazy, but it was on, the whole game has changed. I looked at that, it was on 30, 31, 32 times sales, and I was like, oh, that's nosebleed, okay. But then they had their ChatGPT moment, and overnight, EPS and revenue went up 400%.
Yeah.
And then it became cheap, and everyone's like, okay, fine, justified.
Because let's remember, if you're on 30 times sales, and your revenue goes up, 100% for 4 years, then you go to 15 times, 7.5 times, 3.75 times, and suddenly you're down to 3 times sales.
Yeah.
And it makes sense, and the stock can go up again. But let's remember, NVIDIA has not really gone up now for 12 months from where it peaked.
Yeah,
and that's what Piers is saying. There's a danger that Palantir is at this point here in the chart.
Well, the difference is that Palantir is owned by the retail crew. They're probably watching this, even if they're not watching this, they'll watch someone else say this in America on a big show.
They should be watching us.
Well, I wish they were, but the point is that they're in forums telling Jim Cramer that he's a DICK and et cetera, et cetera. So the point being is that they can continue to do this. I don't know for how much longer, but the point being is that at some point, because this, at least there is this, at some point, and I don't know when that point is, there will be a day of reckoning for this stock. They have to grow revenues about 200% more, at least, I would say, than where they are now in order to justify where they're trading.
Yeah, because you think they're growing them about 28%?
It was 28. It went up to 35 last quarter, which is why they got it.
Yeah.
But the point being is that I haven't heard anyone give me a valid argument for this beyond, oh yeah, this is the future of AI and they're growing, they've got great for government contracts. Who cares?
And by no means are you questioning how fantastic they
No,
are.
I mean,
they are absolutely fantastic.
They're the number one AI data analytics in the cloud. They have contracts with all the best companies and governments. We all know that. Great. Who cares? The revenue growth is 35%. That's all that matters.
And even if it got to 40%,
even if it got to 100%, it's still expensive.
Because it has to do it year after year after year. For 10 years, it has to grow at 40% revenues. And of course, that's 40% of a bigger number to warrant the share price it is today. That is what retail are not understanding about valuation.
And one other thing that is really worth mentioning is that the sell side are basically sheep. Whenever there's a stock that's like this, they jump all over each other. Look at the sell side. Half of them have got shorts on this. Right? There's people with $30 price targets, $20 price targets. They have not. The only people who have upgraded their numbers are Dan Ives at Wedbush, who's a massive bull, and good luck to him. I mean, he's a very good analyst, to be fair. But nonetheless, this is a battleground on the street. The street have not done what they always do.
Here you go.
Piggyback on top of each other. There's loads of sell rating. Look at this.
The average analyst price target is 24% lower.
Yeah, well, there we go. And those have been raised again and again, but people can't continue to raise them with a straight face. It's just like, I don't know what's going on. I genuinely don't know what's going on, apart from the fact that the retail crew just love pissing people off.
Oh yeah, absolutely. And but they think they're right, and they don't.
Of course they do.
Care
they don't care.
if it goes down 15%. The difference between a hedge fund manager and retail, they'll see it down at 110, and they'll buy more of it.
Awesome, yeah. Whereas the hedge fund managers are like, here we go. It's going to break. Let's short some, and then they get squeezed again.
What is the right level for this?
Listen. I'm going to give this a massive premium and all the free rope in the world to hang itself. But I can't. It needs to be. It's 100. I mean, if it was 50 times sales, or 60 times sales, I mean, it's still. I can't. It should be trading at $50 a share, in my view, and that is. That is not being.
But let's fast forward 18 months and give them their sales growth, and suddenly it's at 70.
Let's say they get above 50% revenue growth, right? For a stock that's of this size and this stature with earnings potential, that is You've got to take it all into the equation, right? The guys that are growing at 400% that don't have any earnings and a dodgy balance sheet, that's a whole different thing. This is a high quality company with a high quality investor base, et cetera, et cetera. So you've got to give them a lot of rope. So if they get above 50%, so I mean, I'm being generous here, but that still needs to come down. They need to get, the price to sales ratio needs to be below 50.
Okay, so
at least.
Within 2 years, let's say.
Within 2 years, and that will happen at some point. Like something's going to have to happen here.
So if
maybe it doesn't. Maybe the retail will just continue doing this for the rest of time.
So this, if you want to get up my Tasty account now. So what have I done to put this in? How do we make money from this, right? Shorting, dangerous. We all know shorting a name like Palantir, you can be wrong for longer than your P&L forgives you for. So I am short 2 contracts, that is 200 shares, so $32,000 worth. I am short calls for August expiry, and I'm short those at $8 a share. Break even, $168, currently $139. But I've gone further. After Piers was on the show and did a wonderful TikTok the other day, I have doubled up my position and gone short of the 180 calls, right? So I've given myself a bit of room there as well. And I'm short those at $4.50. Those two together are taking in about $3,000. But I also know how great this company is. So at 110, I'll actually give them a bit of a break. And I'm short puts at 110. So if I add the 4 from the short puts and the 460 from the short calls, I get into them about $100. And I'm relatively happy to buy them there, considering how bearish.
Yeah, I mean, listen, I think as a trader, you need to respect what's going on here, right? By no means do I think this stock's going to be trading anywhere near 50 anytime soon, because it's just not.
Yeah.
But
it traded $68 2 months ago, 3 months ago.
There is a chance. You got to, if you rewind the clock on Palantir, right? By the way, back to 2020, 2021, this was one of the most hated battleground stocks in the world, and it was just, they had loads of the governments. They're on the edge constantly of pissing people off, right? The UK government yesterday came out and said that the NHS have essentially said that they're a bunch of I forget the word they used, but it was not it wasn't a nice thing that they said about them.
Why?
They rub people up the wrong way because they're so involved in such
very arrogant CEO.
Oh, he's the most arrogant guy, and he's best mates with all the Trump administration, the Pentagon, and I get it, but I just want them to get smashed so badly because I just don't. It just annoys me because it just defies all the rules that we've learned over the years, which have been broken in so many parts of the market. But sometimes it just gets crazy.
No, Monkey Man, good point. Should I sell my Palantir? He says. This, remember,
here he is.
This is like, you're the one that's made money from this, right? So remember, Piers and I have been doing this, 20 years each, and we have been wrong as many times as we've been right. So, take all this as with a pinch of salt. But
well, I mean, if that's a real question, should I sell my long position in Palantir?
Remembering that you don't give financial advice, of course.
Yeah, but unless that's a joke, the answer is. I mean, I think it's the stock's extended. So if I had a long position in it, I'd be taking profits here.
Because what we're here to do is try and reduce the risk of people losing money, right? And I do not want somebody to come in and buy Palantir at 139 because everybody else is already on the train, and it's gone full steam ahead. So this is more me really making sure that people that don't know about valuations, I want them to know the risk of buying them here. I'm not saying sell them, I'm saying the risk of buying them. But overwriting calls on top of your long position, now that is something that makes sense to me, and that's what I would be doing personally. Next up.
Well, I think just quickly we need to talk about Plug Power again, because I've spoken about it a lot on this show, and there was a lot of stuff that went on yesterday with them. They did an analyst day,
right.
and JP Morgan and I forget the other one. wrote pieces on, and it's been a long time since any broker, particularly of the statute of JP Morgan, has written a note that's positive on Plug. I can guarantee you that. I mean, this was being priced as if they were going out of business a few months ago.
Which is when you first mentioned them, to be fair to you. And I don't often say it, but...
No, you hate saying it, but there we go.
You've done all right there.
The Trump administration have thrown them a bone, big time, as they have done for the biotech guys. They have ruled out cutting their tax credits, which is a huge overhang removed from the, and that's essentially the gist of the JP Morgan note yesterday. Okay. If you combine that with the Uzbekistan deal they have, which is I think it's a 5-year deal, $5 billion, or might be longer than that, but either way, that helps the balance sheet out, and the restructuring of the debt, and the 35% short interest, and the fact the market's rotating into the heavily shorted, unloved parts of the market, and the small caps, it makes a pretty compelling case for this stock to go higher. Just to be clear, I forget the broker who wrote this note yesterday, so apologies, but he wrote his price target, he upgraded it to a buy, haven't seen an upgrade to a buy in a long time, with a $3.50 price target, so that's over 100%.
$3.50?
Yeah. So I remain long and strong, and what I like about this as well is the price action has changed dramatically. In the fact that rallies were getting sold, and then the bottom was falling out of it. Rallies are getting sold, and then it's holding and it's rallying, and so the price action has significantly improved.
So Morgan Stanley saying 50 cents target, Wells Fargo saying $1 target, Susquehanna saying $1 target. They really are.
Bear in mind, these people or those notes are very much outdated.
That's from me. Sorry, yeah.
The only people that are relevant, in my view, are the people who have written since these new developments in the company. So we'll see what Morgan Stanley have to say, if anything, next.
Right, we have a question about Oracle. Jay asking, what do you think?
It's a great question. Oracle are going through a fascinating re-rating right now. And re-rating, for those of you that don't know, is where an event takes place and a company's valuation is then justified to go into the next bracket higher. And that is certainly what's going on with Oracle. I must admit they are trading on 32 times earnings now, which puts them at a 15% revenue growth, which puts them in the expensive bracket. But it's a positioning game again. They are so you've got Amazon Web Services, Microsoft Azure, Google Cloud, and then you've got Oracle. So you've got it's platform as a service, software as a service, and infrastructure as a service. They're the three big hybrid cloud hyperscalers in the world are above them, and Oracle are playing catch up. They're like the baby brother of the group, and they have just continued to win business. They did a huge discount for the government the other day, which was well received, and essentially they've just gone all into AI. So they're having a transformational moment, a re-rating. I'm a bit annoyed that I missed it, because I kind of liked them and they didn't get involved, and when it breaks out like that, you're reluctant to get involved, and it's gone up again. It's a positioning game as well, right? In the hyperscaler, no one's was long Oracle, and then everyone's had to scramble to get long to catch up to be there. Yeah. So, but it's a little bit expensive for me, but I think it'll probably grow into that. It's the opposite to Palantir. My thoughts on Palantir. I think this will grow into the valuation quite nicely.
And really one to watch if it did come off.
This is a stock, in my view, that I would 100% buy when it comes off on a dip. It's overbought and it needs to come back.
Yeah, back to this kind of level around 213. So
that big major breakout is obviously critical, right? It needs to consolidate here, and then has a platform to go higher. But what I like the positioning here. I like the fact that
I think this summarizes, and I'll show you one other, summarizes what Piers and I are talking about. There are stocks outside the Magnificent Seven that you can make money on, and the forgotten ones, right? Yes. Your boring old uncles at the wedding that you haven't talked to. You can have a good conversation with them as well. And here is another idea. The big blue.
And I mean, this is and by the way, so this reminds me, this is exactly my thoughts on Intel. Rewind the clock 3 years, this company was dead and forgotten, and I had conversations with people saying they're never going to transform, they're never going to turn the company around. Look at that. They have massively turned the company around. They've pivoted into AI infrastructure, mainframes, and they are breaking out to all-time highs after having been dead and forgotten for many, many years. So Intel have got a lot to do, but it's these large, big legacy companies in America that they get a shift in. if Intel didn't have a chance to get into AI, I wouldn't be having this conversation. But they do. They just need to figure out how to monetize it. Anyway, so to your point, there's some big boys out there that are not talked about very much, like Oracle, like IBM, that are breaking out to all-time highs with people. Not, if you look at a portfolio, everyone's long Microsoft and Netflix. Who's long IBM?
Who's long Tesla?
Oh, God.
What happened?
I mean, wow.
What happened yesterday with the argument between Dan Ives and Musk, but also Adam Jonas came out with an interesting report as well.
And those three names you've just mentioned are
the gods.
They're the epicenter of the conversation on Tesla, right? Adam Jonas at Morgan Stanley, he has to be fair, he's called this stock well for the last decade. It's a difficult one. He knows a lot about the company. Same Dan Ives. But I think Musk is going through a period right now where he's on a mission to just
self-destruct.
You could say that, but I think that I've got to, until he does until something shows me that he has self-destructed, I'm just going to assume that the guy's dominating because as far as I'm concerned, he's always dominating. He's the smartest guy in the room. So he's often shoots himself in the foot by saying stuff, but he doesn't care. He sees the analysts as just a complete waste of time anyway, right? But the point being is that the stock is trading on his comments and his political views, and it's all very emotional. And more now than ever, is it not really? I don't even see it as a stock.
Adam's a big bull, right? And Adam says, if things turn, forget about the headlines, forget about America, all that. America Now, is it? He's called it.
Oh yeah, I forgot
the America Party or whatever it is. Forgetting about that, look at the potential for Tesla for the long time. Is this the opportunity to put on a structure? So what I've done is looked a year out and sold some puts at $100. So I would have to buy Tesla at 100, but I've used that to put on buying calls at 500 and selling two at 800. Put that together and you actually get into this structure for about $1, right? So $1 expense, 300 of upside. If Tesla goes up as much as 800, which I'm not expecting it to do, but it's my little lottery ticket. Paying $1 to make 300, I am happy with those kind of odds. So that's the way I'm playing Tesla at the moment. Others that we talk about, Marvell.
Yeah.
I've sold some puts in Marvell at 55.
Yeah. Right,
currently trading 72. And I bought an $80, $115 call ratio. Am I at risk on the upside? Can it go higher than 115 by September?
Where's it trading?
72.
I'd be very surprised. I think I'd be very surprised if it exceeded that level. Marvell also is one of, and it was interesting to see how the market traded yesterday because the market rotated aggressively back into these unloved semis, including on semiconductor and Micron. It was the reflex action, and Marvell underperformed quite significantly the group. But my thoughts on that are that I just don't think anyone kind of understands, like, the amount of people who don't even know who Marvell are. It's quite like, even you didn't. I mean, if you don't know who Marvell are, I mean, you've been working in the market for 20 years. I mean, there's literally no one knows, and they certainly don't know what they do.
No.
So I think it's going to take some time. Obviously, tech specialists know exactly what. When I'm not talking about tech specialists, I'm talking about the broader market. It's certainly not on any retail agendas, and I don't think it's on many long-only agendas right now, despite what the CEO said the other day, which was pretty compelling. But for me, which was that high bandwidth memory, which these guys custom chip high bandwidth memory, which these guys specialize in, essentially the only company in the world that do this tailored towards AI, is exploding and is essentially going to be the only form of memory going forward in the AI data center. I mean, if you just listen to what he says, you just go and buy the stock, right? But it's going to
18-month.
Yeah, I don't think this is a particularly short-term thing. I think it's had a decent run, it's in a nice uptrend, but I think this is a 12, 18 month. If you can hold that long, this stock could probably see the highs again. What are the highs again? I can't remember.
They were. That's why I was a little bit worried on the upside. I mean, it's a 1x2, so 124.
Yeah, I mean, I think this stock will take out the highs at some point in the next 2 years.
Okay.
So if you've got that time frame and you're willing to be that patient, just hold it. Don't worry too much about it unless the story changes.
Great question from Pelican. Big shout out to Pelican in capital letters as he does so well. How do metal tariffs affect these AI infrastructure? Now, copper is a small cost, right? But they're going to use a lot of it, and they got to build this AI infrastructure. Do you have a view on how those tariffs will affect?
You mean the copper tariff? You mean that came in yesterday? Yeah, yes. Well, I think that it's a bit nuanced with regard to the price of copper. Price of copper is a really difficult one because putting aside the tariffs, the supply-demand fundamentals for copper are like in a secular bull market. So so I actually love them, but it hasn't traded like that recently. And a lot of that's got to do with China and short-term fluctuations in restocking and destocking, etc. But I think it'll be a short-term phenomenon. Essentially what happened is the Trump administration's tariffs force an unusual amount of supply into the market. Out of the market rather. But I think it's going to, we got this news not that long ago when it spiked up aggressively, and then what was that?
Just last night, 6 o'clock.
No. I don't mean yesterday. I mean the last time this happened.
Oh,
that is exactly the same thing, right?
Yeah.
Exactly the same thing. He put exactly the same tariffs in place, and then the American supply managed to figure itself out essentially. Long story short, I think that the copper will be short-lived. We'll probably, albeit there'll be a floor under it, but I think that will come back. Listen, this is one of these subjects that I think is really, really, really difficult to get a grip on, quite frankly, because it's such a moving target.
Yeah, so that is the real copper price. That's the London one. That is based upon.
And by the way, look at that exactly. That's a completely different picture to the other one, right?
Right, Piers. 20 seconds, fast round. Hit us with any other things that you haven't covered just yet. Boom.
I think we've covered it all. It's completely off-piece. Salzgitter in Europe.
Wow. It's a name I haven't.
They did
for 15 years.
Yeah, well, I think they've kind of now a different situation. They've moved quite significantly, as you can see.
Yeah.
Because there's been some talk of a deal here or a takeout, which is now internally being considered or reviewed, but. The regulatory change, which I think happened yesterday, is more interesting in the short term, which is their steel products have been approved for use, military grade use, which is obviously going to be quite critical.
Okay, so this joins the kind of Rheinmetall trade.
Yeah, kind of, yeah.
23%. Whoosh, right.
Yeah, so that's grabbed my attention in Europe in a completely off-piece, but looks like it's got upside because it's still trading at a discount to its NAV.
Is it really?
Yeah, is it?
Whoa. Well, I did not expect you to come to me with a German steel idea.
Yeah, well, and what's the company that they own? Oribus? I forget how you pronounce it. Arubis, that's the one, yeah. Which is obviously, so if you look at the NAV of the company, it's still, regardless, despite this move, trading in an NAV at a discount. I just thought we'd just step off piece.
Neil, don't encourage him. Away from the numbers. Great segment. More of Piers, please. Oh, that's said nobody ever.
There he is.
Awesome. Thank you very much for coming in, old chap.
Yeah, good to see you, mate.
Let's see Plug Power down 25% tomorrow. Thanks very much. We've got Jolie coming up next. Don't go away.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. cash returns. Go. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, trader friends! Welcome back to the show with myself and Jolie.
Hi, good morning.
How are you, Jolie? It's been some time.
Yeah, doing really well. How are you?
I'm really good. You're able to sleep in the heat?
Mm-hmm.
Well,
Just barely.
I'm pleased to be back because I think the heat got the better of me and I then had this terrible sore throat yesterday. But thank you, Arsax and Gavin and Monkey Man, everyone that asked after me.
Mm-hmm.
It is good to be back. It's amazing what Baraka can do these days.
Yeah, truly.
Speaking of which, have you caught the sizzler of the summer, the F1 movie?
No, not yet. No, I've heard good things.
So it is historic. Trader friends, if you are into history and cinema, this is history in the making. Just showing you Apple's shares as well. Going to my full screen, if I may. We have Apple, and I'm showing this to you because F1 is Apple's highest grossing theatrical film ever. I managed to catch it with Terrence recently because I'm really interested in this space. It's the first time ever that the storyline people has been concocted, with marketing first. Sponsorship deals hitting some $400 million so far. It hasn't even reached the checkered flag of its theatrical run yet, but it's already Apple's best film release ever.
Yeah, that's quite remarkable. And Apple TV is amazing too. Like they've got so many good shows, film aside, Severance to be one of them. I know it was like a smash hit. It's very good.
I haven't seen it yet.
Ugh, you'd love it.
But speaking of the shares, right? Just checking out Apple shares here, trader friends, because I'm also going to I've knocked up a bit of research for you guys as well. It is slightly ticking higher now. We had a moment when Scotty Byrne was here and we were talking about Apple and the concerns that it shares. It was so behind on the AI march. A lot of people wondering whether it was going to come back from this, be the comeback kid. But taking a look at the full screen here, if we look at it, just take us through some of the key points there, Julie.
Sure. Yeah, we're seeing current price, $213.55. It's up 8.53%. We've got the market cap of 3.14 trillion. So great stats there.
Yeah, and we talked about recent catalysts, so that F1 movie success so far, also strong services, but those risk factors, the AI leadership concerns are really weighing on the stock. China headwinds as well, obviously that's its biggest market. But taking a look at this, so I'm going to come off my screen now, Phil. Let's have a look. So what does this mean in terms of its share price? Because on a technical view here, we are looking at potentially, somewhat sideways. That's what the daily price is telling me at the moment. We're seeing major support. I'm going to try and draw that level for you there, if I may, at around that 193 level there. This is a daily chart. And we are also, this is, multi-month lows there. We'll see if it tries to track lower or if it heads back up to levels last seen in May. If it punches through that, then we could start tracking towards that 28th of March high. How would you trade this on the option side of things?
Couple different ways. We could go, buy a call option if we wanted to be a conservative trader, and say, hey, we think this stock is going to climb in about a week's time. Right now, in the money option would be, we're seeing 210 for calls. So if we wanted to buy that, we think it's going to skyrocket, and then we can go ahead and sell it for even more of a profit. We could just hit the ask price here for the 210. And as we know, these prices are not moving in real time because the listed options market is not open yet. But where things closed, this would have been the nearest in the money option. We would be paying $370, but say, hey, we think this is going to jump up to 217. Difference between that is 75, right? Because 217.5. So theoretically, we could get a $750 relief if it jumps up that high. Which would be cool. So that would be the conservative strategy. Yeah. If we wanted to sell a put option, maybe, or rather sell a call option. Let's talk about that. Maybe we have Apple, right? It's a really common stock, and we want
to get away from it.
We want to get a little bit of premium, and we say, hey, you know what? I'm cool with selling at 215. I bought these at 205. We could sell a little premium, get 152 bucks in, and then potentially, they could be called away, but we own the shares. So if we're cool selling at that price, we could get a little premium. Conversely, we could sell a put option if we wanted to get a little bit of premium too. That wouldn't be covered by just long shares necessarily. But another way to get some premium, especially if we think it's going to be out of the money, right? So if we think that Apple is going to be at 217.5, we could get the $450 in premium, and then potentially when it's at that price, you wouldn't want to sell it at 212, right? Because the market's going to offer you a better value. That would be another way you could go about it. More of a risky strategy, but something you could do with your options.
Yeah, I like how you're giving us a risky and less risky strategy. Because I'm a stop loss girl, so
She's a stop loss girly.
I'd like to go for the less risky strategy and then replicate it. Another one that we have been asked for here on the show, calling out Pelican. As I promised Pelican, I was going to take a look at this. Switching gears to Archer Aviation. Is this one that you are familiar with?
I have not been following along with Archer, but so keen to learn more.
Yeah, incredibly sexy here. This is one that it's a company that is creating these verticals and wanting to go into the air robotaxi space as well. Yeah. And recently it has had an uptick. So I'm going to draw that line for you here just to show you. And it has had, a recent bounce back. Looking at strong support at around 972, secondary support at around 913, and also just a key point here, trader friends, this is a very volatile stock, and also keep in mind that we have had a recent bounce back here, so just be aware that we could be in line for a brief correction now, because it's just motored so much higher. So take us through how you would play this on the options.
Yeah, good question. So you mentioned this is a volatile stock, right? We're not sure where this guy's going to go. So if it were, I was like, hey, I want to make a move right now because don't know where this is going to go. Potentially, I could go with just the 2-day expiration, right? This is going to expire in 2 days. And say, you know what, I'm not quite sure. There's
so you're going for 2 days because you want to just quantify that risk?
Yeah, I would say so. I mean, that's not advice, but just like for me personally, if it was volatile, I could theoretically, narrow down the move for that, right? So there's not going to be as much time value attached, not as much theta, so prices may be less attractive than what we've than for longer term options, for example. But we know that shorting an option has a higher probability of profit, although it's a riskier strategy. So say, hey, I just want to get my profit, go in, go out. Why don't I go ahead and just sell something that's out of the money, get a couple bucks and just get out, right? This is just going to be $8. It is a bit of a risky strategy if we're just selling a call here, but hey, I'm not above a quick buck, $8, sure. This could be something that you could do, right? And if you're right, it's out of the money. You just get to keep your $8, or say moves in your favor, you could buy it back for like maybe $1 as we approach expiration and the theta decay just eats away, right?
Nice. And for those of you watching this new to the two platforms that we're showcasing here, a good way of really easily looking at implied volatility is top left-hand corner there, where you can see IV rank.
Yes, indeed.
Yeah, so that gives you a good idea.
Well, another thing I thought was interesting about this stock in particular, the volume too. So not as much volume as like an Apple, for example. So for that reason, the leads to volatility.
Apple, so we can show
it leads to the more volatility because, if one person, you know what? I misspoke. Look at that.
I was thinking more like NVIDIA.
Let's try NVIDIA. Okay, here we go. We go. Yeah, a move and arch, like one, it moves a lot quicker than it would in NVIDIA with all that volume.
Yeah. And look at the IV rank there for NVIDIA, a nice 7.4 compared to that very high volatility. Just punching up my slide as well that I've made for you guys. Some of the major things that have happened recently with Archer Aviation, which is seen as a pioneer in the air taxi space. It's just had a major partnership, United Airlines ordering some 200 Archer electric aircrafts as a first major corporate partner. But as we mentioned earlier, you heard Jolie and I say high volatility for the stock, and also very, very early stage, right? The eVTOL market is still developing those vertical lift-off type vehicles. So make sure you've got your gloves on when you're looking at this. Right, last but not least, we have 7 minutes here. Have you ever used Estee Lauder?
I haven't used Estee Lauder.
Piers has, because he keeps talking about Estee whenever he's
I've used Clinique, which I feel like is in the same realm, and I feel like Estee Lauder probably owns some of these other brands I use. I need to look into that, but yeah.
That's why her skin is so wonderful. Yeah, whereas I can only afford Simple.
No. I don't believe that for a second.
Right, so here is the slide that I've prepared for you. So Estee Lauder has been, unloved recently, has to be said. It's been, had competition right, left, and center.
Lots of competition.
Yeah, beauty giant under pressure here. Recent risk factors, China, a big growth market for it, but they've had persistent weak demand there. Plus, the Chinese and the South Koreans, they've got their own products, your shaders, your, what is it they call, glass skin products?
Yeah.
It makes it shiny like glass or mirror skin. Don't understand, to me it looks oily, but still. But profitability, get it out, and pressures as well. And also the fact that it's kind of lost its way. Piers and I talked a lot about Estee Lauder 2 weeks ago. You can watch that on Catch Up. But it's kind of lost its way, and it's trying, the new CEO is trying to have this beauty reimagined. Come off my chart, guys, because we're going to have a look quickly at Estee Lauder's share price here, because it has had a recent bounce. So here we are. Estee Lauder, and this is the daily chart, trader friends. Can you see it's moving progressively higher since April? It's had lots and lots of nice green candles there, more green candles than reds, and a very strong upward trend there, strong bullish trend there. Also, if you come out of the chart, yes, it has fallen a big way, but look, there is a breakout on the right-hand side, right?
Yeah.
See my nice line that shows you the pain it's had, but now it's broken out since the end of June. So Jolie, what's your call on the option side?
On the option side, so potentially because there is a breakout, right? And since we're stop loss girlies, we want to protect things. Maybe I don't trust that it's going to align with that. Maybe I trust it's going to come back down and align more with a nice long line. Because of that, we could do a couple things. If we think we're bearish on this now, right? We could buy a put option. So say, hey, that looks nice right now, but in a couple weeks, 16 days out, I think we're going to see a downturn, but I want to make sure I can sell at a higher price rather. That came out weird. I could buy like an 88 put, for example. And if it goes, if it keeps going down, this guy's going to be valuable, right? Because I've got the right to sell at 88. And aligned with that would be more attractive options prices. So if I didn't want to take assignment, I could just go ahead, sell it for a profit, right? Right now, it costs mid-price, rather, is $3.95, which markets aren't open yet, so it could open very differently. But say if we're working off the mid, we buy it for $3.95. This guy jumps down, and now it's really valuable. We can sell at 88. This could jump up in price, and that's where we would solidify our profit, selling higher than what we bought it for.
Nice. And explain the mid-price to us. Is that quite accurate? Is it
mid-price? It's not like inaccurate. What the mid-price is, it's the halfway point between the bid or the ask. So for options traders, they're like, hey, I don't want to just take the ask price. I think this is going to move. I'm going to try to capture the best price I can get. So a lot of options traders will shoot for the mid, and that's what the Tasty platform is built around. So you may not get filled at the mid, but it's a really good place to start. You could always keep upping it by a penny, which I know our friends Nick and Tom, Tom and Tony like to do. Capture every dollar. Yep. So, yeah.
That's kind of like the equivalent of Ange in the Bureau de Change, and there's a long queue somewhere in Asia, and I walk up to some of the people down the queue or up the queue, and I go, this is the bid and this is the sell. How about we go halfway and I just exchange with you?
Yeah.
Right?
Hey.
That is the thing. Warner Brothers, Monkey Man. Well, good morning, Monkey Man. Talked about Apple TV. What about Warner Brothers? Hey, that is a great question, because that F1 movie that we talked about, Jolie, it is distributed by Warner Brothers Discovery.
What a collab.
The company that I used to work for. And what is also interesting, and you had a cool term for this.
Yeah.
This is the first time, people, trader friends. I love this term that Jolie mentioned.
It's like an ETF movie, right?
It's like an ETF
It's all these different companies coming together.
They are, and they came together before the show was conceptualized. So your Warner Brothers, your Netflix, your, of course, Apple, because it's them kind of like, leading that ETF movie charge for F1. And they came together. And what's interesting about this is they are profit sharing, they're revenue sharing, right? And Warner Brothers has had a big move higher. It's looking bullish as well. Here, lots and lots of green candles. But what I like to see with Warner Brothers is on the daily chart, we have broken past that high seen around 26th of March. And we always say, look to the left of the screen for the next level. And now if we get momentum continuing and volume remaining strong, then I would say with continued success with Apple and the other profit share partners, it might move back towards that February high. Let's also dial it out so that we don't miss anything on the chart. So I'm going to the weekly. And similar there, looking for if we see more conclusive evidence of a break above that February level, then we could be off towards that level last seen. I guess if you're looking at the weekly chart, it would be December. Pay attention though, because Scotty Byrne talked about this. Those of you that use technicals, always use it alongside fundamentals, don't use it on its own. But also if you cross over to the weekly, make sure that you're, I always say, no celebration if there's no confirmation, right? So if you have a close above a daily chart, it has to be a daily close above is kind of what you might be different, but that's my way of doing it. If you're going towards an hourly, then it has to be a different percentage. Weekly as well, some people use a 2%, 3%. So it really depends on your risk reward ratio. Away from numbers, saying Jolie, Andrew, great piece. Thank you very much. Thank you, Neil. Hope that was helpful. What's the rest of your day like?
The rest of my day?
Yeah.
Oh, it's gonna be nice out. I think I'm gonna get drinks with a coworker after work. What about you?
Today I've got a bit of catch up because I was not well yesterday.
That's right.
So I
Yeah.
had several meetings I had to record, so I have to listen to that. So you met Neil at the event.
Yes.
Yeah. This is Neil.
Yeah.
Right. Thank you,
Nice
guys.
to see you virtually.
For more, do message us on ask@ig.com. But also, slam the like and subscribe button. Slam it right now, because don't be a freeloader. Because Jolie, I messaged her, and she has a very busy day. And out of the kindness of her heart, she's here with us. So any questions, we get them answered for you. This is for you guys. So do slam that like and subscribe button. We'll see you tomorrow.